Hi, welcome back. In part 1, we covered the top portion of the Form 1040, your name, filing status, and dependents. Now let's move on to part 2, income, where you start entering your earnings from work, investments, and retirement accounts. This part of the series is where most people get confused, because this is where all your money shows up. Before we jump into income, let's take a look at how the 1040 is structured overall. So part 1 is the personal information, name, filing status, dependents. Part 2 is income and adjusted gross income. That'll cover lines 1A through 15, wages, interest, dividends, retirement, capital gains, and adjustments to calculate AGI. In the last video of this series, we'll cover part 3, tax, credits, payments, refund, and amount you owe. That last video will cover lines 16 through 38. It'll show the tax calculation, credits, withholding, refund options, and then finally the signatures. This video focuses on part 2, income, which is where you start listing everything you earned during the year. Now before filling in your income lines, let's talk about where your numbers come from. Almost everything you enter in part 2 comes from official IRS forms that are sent to you by whoever paid you, your employer, bank, brokerage, or government agency. And here are some common forms that you'll receive. If you didn't receive them by mail, you can log in to your online account or your brokerage or bank and download the forms directly. Almost every major platform provides them under a tax documents or statements tab by late January or early February. Here are some examples. Alright, so now let's get started on section 1, your W-2 income, line 1A. The first line 1A is where you report wages, salaries, and tips from your form W-2. If you're filing by paper, attach all your W-2 forms to the front of your 1040, just like it says on the left. If you're e-filing, you don't physically attach them. You just enter the information electronically. One important thing to remember, your W-2 box 1 shows total taxable wages after their pre-tax deductions, like 401k or health insurance. So use box 1 on your W-2 for wages, not box 3 or box 5. Those are for Social Security and Medicare wages. If you had multiple jobs, you'll receive a separate W-2 for each one. Alright, moving on. Line 1B is household employee wages if you worked as a nanny or caretaker. Line 1C is tips not reported on your W-2. You would have to include Form 4137 for Social Security tax. Line 1D, Medicaid waiver payments not reported on W-2. Line 1E, taxable dependent care benefits from Form 2441, line 26. Line 1F, employer provided adoption benefits from Form 8839, line 29. Line 1G, income reported on Form 8919 if you were misclassified as an independent contractor. Line 1H, any other earned income like jury duty pay, clergy housing allowance, or scholarship income. Line 1I, that's non-taxable combat pay election. This line is only for active duty military members. If you serve in a combat zone and your W-2, box 12, code Q, shows non-taxable combat pay, you can choose to include that pay in your earned income, only for purposes of the earned income tax credit. You would enter the amount of that non-taxable combat pay on line 1I. If you don't make that election, or if you're not military, leave line 1I blank. As you can see, there are two box fields here. The left one is for the amount of non-taxable combat pay you elect to include for EITC. Everyone else skips it. So if you're not military, you don't use line 1I at all. Then add up lines 1A through line 1H and line 1I if it applies to you. The total of all these income sources goes on line 1Z. Next we have interest and dividends, lines 2 and 3. This is your investment income. Line 2A is for tax-exempt interest, like municipal bonds that aren't taxed by the federal government. Line 2B is for taxable interest from bank accounts, CDs, or treasury bills. Line 3 is for dividends, money you earned from owning stocks or mutual funds. Line 3A is for qualified dividends, and line 3B is for ordinary dividends. Here's how it works. Ordinary dividends are your total dividends, and they're taxed at regular income rates. Qualified dividends are a portion that meets certain IRS rules, like being paid by a U.S. company and held long enough, and they get taxed at lower rates, 0%, 15%, or 20%. Here's a quick example of how you would enter this on line 3A and 3B. To find these amounts, check your Form 1099 DIV from your brokerage. Box 1A shows total ordinary dividends. That goes on line 3B of the 1040. Box 1B shows qualified dividends. That goes on line 3A of the 1040. If box 1B is blank or 0, it means none of your dividends were qualified. If you earn less than $10 of total interest from a bank, you might not receive a 1099 INT, but you still must report it. Finally, if your total interest or dividends exceed $1,500, you must attach Schedule B. Alright, next we have lines 4A and 4B. This is for IRA distributions. When you take money out of an IRA, individual retirement account, your financial institution sends you Form 1099-R. That's the key form for reporting retirement distributions. Here's how it works. Box 1 on Form 1099-R shows the total amount you withdrew from your IRA. That goes on line 4A of the 1040. Box 2A on Form 1099-R shows the taxable amount. That goes on line 4B of the 1040. If Box 2A on Form 1099-R says taxable amount not determined, you might need to calculate the taxable part yourself. For example, if you made any non-deductible IRA contributions. Here's a quick example of how this is done. Alright, moving on to lines 5A and 5B, pensions and annuities. These lines work the same way as IRA distributions, but for pensions, 401ks, annuities, and similar plans. You also get Form 1099-R for these payments. So box 1, that's the total distribution, goes on line 5A of the Form 1040. Box 2A is your taxable portion. That goes on line 5B of your Form 1040. If you're receiving monthly pension payments, the payer calculates and reports the taxable portion for you. Here's a quick example. Moving on now, we have line 6A and 6B. This is Social Security benefits. If you receive Social Security benefits, you'll get Form SSA 1099 in January from the Social Security Administration. Here's how it works. Box 5 of Form SSA 1099 shows your total benefits received for the year. That goes on line 6A of the Form 1040. Then you figure out how much of that amount is taxable and enter that amount on line 6B of Form 1040. Here's how that taxable portion is determined. So in short, everyone reports their total Social Security on line 6A if they receive a Form SSA 1099, but only those whose total income passes certain thresholds will have part of it taxed on line 6B. One important distinction we have to clarify here is that you don't pay Social Security tax on these benefits. These lines are only about whether they're taxable as income. Next, we see a small c under 6A. It says if you elect to use the lump sum election method, check here. You would only check that box if you receive the qualifying lump sum distribution from an employer plan and choose to calculate your tax using Form 4972. That's the tax on lump sum distributions. You would attach Form 4972 to your Form 1040, and this checkbox signals to the IRS that you made that election. If you didn't get a lump sum payout from a pension or similar retirement plan, leave it blank. Don't check it. Most taxpayers never use this. It's mainly for the older retirement accounts. Next, we have lines 7 and 8, which cover capital gains and other income. These two lines often involve extra forms, depending on what type of income you had. Capital gains happen when you sell investments like stocks, mutual funds, crypto, or real estate for more than you paid. You'll receive Form 1099-B from your brokerage or Form 8949 if you keep detailed records. Here's what to do. If you sold any investments, your broker or exchange sends you Form 1099-B listing each sale, the date you bought and sold, proceeds, what you got, cost basis, what you paid, whether it was short-term, held for less than a year, or long-term, held greater than a year. You can use those details to fill out Schedule D, capital gains and losses. That's the IRS worksheet summarizing all of your sales and calculating the net gain or loss. Then the final number from Schedule D, line 16, goes on Form 1040, line 7. So where it says attach Schedule D if required, that simply means if you had more than one sale, multiple transactions, or need to show your calculation, you must attach Schedule D to your tax return. If you only had a simple capital gain or loss already reported to the IRS on your 1099-B and no adjustments, your tax software might handle it automatically without physically attaching Schedule D. So here's a quick example. If all your sales were already reported on 1099-B with correct cost basis, the IRS already knows, but you should still attach Schedule D if required to show the math. Crypto exchanges like Coinbase and Kraken also issue Form 1099-B or 1099 miscellaneous if you sold or earned rewards, so keep those in mind. Alright, moving on to line 8, other income from Schedule 1. This line covers everything else that doesn't fit into the earlier categories. You'll find the total on Schedule 1, line 10, and transfer it to line 8 on the Form 1040. Alright, here are some common examples of additional income. This also includes income from platforms like Patreon or Etsy if you were paid without a W-2 or 1099 NEC. Each of these comes with its own supporting form, and you'll report all of them together on Schedule 1. Schedule 1 is an attachment to your Form 1040 titled Additional Income and Adjustments to Income. Then you total them up and carry that amount to line 8 on Form 1040. Once you've totaled lines 1 through 8, you'll get your total income on line 9. Now let's keep going down the form, because right after line 9, the IRS has you list a few adjustments and deductions. These help figure out your adjusted gross income, AGI, and ultimately your taxable income. Line 10, adjustments to income from Schedule 1, line 26. Part 1 here lists extra income that didn't fit earlier, like unemployment, gambling winnings, etc. Part 2 lists adjustments, deductions that reduce your total income to get your adjusted gross income. When you fill out Part 2, you total all those adjustments at the bottom of Schedule 1 and then transfer that total to line 10 on your 1040. Alright, now we have a line 11, that's your AGI or adjusted gross income. That's just subtracting line 10 from line 9. It's your total income minus adjustments. It's one of the most important numbers on your tax return. The IRS and most tax software use your AGI to determine whether you qualify for credits, deductions, and certain limits. Alright, here's a quick example of that. Alright, moving on to line 12. This is a standard deduction or itemized deductions. This line determines how much of your income is not taxed at all. You have two options, but you can only choose one. Standard deduction is the flat amount set by the IRS each year. For itemized deductions, you list specific deductible expenses on Schedule A, such as mortgage interest, state and local taxes up to $10,000, charitable donations, certain medical expenses, but only the portion over 7.5% of your AGI. So if the total of your itemized deductions is higher than your standard deduction, it's worth itemizing. So for box 12, enter either the standard deduction amount listed on the left side of Form 1040 or use the itemized deduction total from Schedule A, whichever you're claiming. Schedule A is just a worksheet where you list and total these expenses. If you itemize, you must attach Schedule A to your 1040. Alright, line 13, qualified business income deduction. If you have income from a sole proprietorship, partnership, S corporation, or certain rental activities, you may qualify for the 20% qualified business income deduction. It's reported on Form 8995 or 8995A. It allows you to deduct up to 20% of your qualified business income, even if you take the standard deduction. You enter the total from that form on line 13. Alright, line 14 is just simply adding line 12 and 13. This is your total deduction amount. The total you'll subtract from your AGI to get to your taxable income. Finally, we've come to the last line in Part 2, line 15, your taxable income. This is the number the IRS actually taxes. So this is AGI on line 11 minus total deductions on line 14. Gives you your taxable income. And that wraps up for Part 2, income. By now, you've entered every type of income and calculated your taxable income, which forms the base for your tax calculation. In the next video, we'll move on to Part 3, tax, credits, payments, refund, and amount you owe, where you'll see how your tax is actually calculated, how credits reduce it, and whether you're getting a refund or need to pay the IRS.